Hi dear traders! Trades closed last week, which turned out to be extremely volatile, focusing on the US labor market reports. According to the fresh data, employment in the US accelerated at a much faster pace than was previously forecasted. At the same time, the unemployment rate also went up. This can be a reason for the Fed to slow down the rate hiking cycle. Yet one of the Fed officials hinted that the regulator might raise the rate by another 75 basis points at the next meeting. Such a confusing information background caused sharp fluctuations and uncertainty in the market. The US dollar index, which demonstrates its value against the basket of 6 major currencies, slumped below the level of 111, having lost all gains from the previous week. Such a reaction may indicate that investors still doubt the US Federal Reserve will maintain its aggressive policy. After the FOMC meeting on Wednesday, the regulator announced that it was going to raise the rate at a slower pace, but over a more extended period of time. Apparently, the market decided to take a breather and the US dollar returned to its previous levels. Meanwhile, the stance of the European Central Bank seems more clear to investors. There is no doubt that the interest rate will be raised at a fast pace. Accelerating inflation in the Eurozone forces monetary authorities to take action even despite the risk of a recession. The report published last week revealed that the Eurozone economy contracted to its lowest rate in 6 quarters. Besides, the energy crisis is looming. In the UK, the current challenging economic situation is aggravated by the recent political crisis. In an attempt to stabilize the financial system and combat inflation, the Bank of England raised the rate by 75 basis points, just like the Fed. The last time this happened in the UK was 1989. Now the rate is holding at its highest level since 2008. The central bank warned that the British economy had already entered a recession that could be deep and prolonged. This could be the reason why the British pound failed to take advantage of a weaker US dollar. As a result, the pound lost almost 2% against its American rival. As for the Japanese yen, it did not miss its chance to benefit from the weakening US dollar. It finally advanced also thanks to the comments made by the Bank of Japan Governor Haruhiko Kuroda. Investors saw some hints that the regulator can make changes to the yield curve control policy. Besides, Japan's monetary authorities have already made a series of interventions. The Ministry of Finance said it had already spent nearly $43 billion between September 9 and October 27 to support the Japanese currency. Gold also managed to recover as demand for the precious metal increased amid doubts that the Fed will continue its aggressive monetary policy. Investors resumed buying gold as a safe haven asset. This pushed the price to the level of $1,680 per troy ounce. In the commodities market, oil notably advanced as well. Traders were encouraged by the news that China may ease its COVID restrictions in the near term. This means that demand for crude will pick up soon. At the same time, we should not forget about the OPEC Plus decision to cut oil output by 2 million barrels per day. Over the past week, Brent crude gained 2.31% and reached the level of $98.5 per barrel. Oil could have posted more gains if it were not for the threat of the global recession. These are the trends of the last trading week, and now a new week and new events are ahead. Don't miss our traditional weekly review, which is due tomorrow. Stay tuned and see you soon.